minute until kickoff. And looks like we've got a great crowd. I'm sure we'll have more people tuning in as we get closer to the start time. So real quick, if you can, before we get started, type in where everybody's joining us from. So again, type in where you're tuning in from today. Dallas, New Jersey, Florida, Pittsburgh, England, Washington, Illinois, New York, Phoenix, Canada, South Africa, DC. All right, good deal. Kalamazoo. Roger, you pulling for the Wolverines tonight? Got the big basketball game on. All right, type in. Let's do this little informal poll before we get started. Who thinks that Louisville's going to win, and who thinks that Michigan's going to win? Let's see what the room has to say. I had Kansas in my bracket, so I was out when they lost. There we go. Well, looks like mostly Louisville. Let's say the crowd is leaning that way. All right, well, good deal. Well, we appreciate you guys taking the time to be with us. Again, we've got a great crowd today. I'm really excited about today's topic. Chuck Crow of DTI is here. We've also got Chip Frame from Nadex that's here that's going to come on after Chuck finishes. But Chuck's going to be talking about two things. One, he's going to be talking about strategies for trading in a smaller account by using Nadex, which is the North American Derivative Exchange. And the cool thing with Nadex is that every trade that you take with Nadex has defined risk. So that means that you know exactly what you can make and lose on each position when you get into the trade. So again, you can actually trade Nadex and open an account with Nadex for as little as $100. Most people, put about $500 or $1,000 to get started in the account. But again, you can trade pretty much any market, any commodity in there. So again, we appreciate you guys being here. Chuck is going to talk. His really the thing that Chuck is in is key numbers, and so he's going to show you ways to get those key numbers. And by understanding the important numbers in the market, you're able to tell basically where to get in, where to get out, where to set targets, where to set stops. And so again, it's extremely important. And the method that Chuck uses is pretty cool. He'll talk a lot about market generated numbers. And the cool thing with that is he's going to show you ways that you can get these numbers each day without having to have expensive trading software, or regardless of who you're using for charting. And so the first part, he's going to show you how to use that. He's going to tell you a little bit about Nadex, and then go through some examples of how to use that and apply that into Nadex. So Chuck, we appreciate you guys being here. Chip, appreciate you as well. What I'm going to do is play a quick video for those of you that are joining us for the first time at TradingPub. We'll put this video on, and then we'll go ahead and get started. All right, well, good deal. Well, Chuck, again, we appreciate you being here. I appreciate Chip taking the time to be with us as well. At this time, I'll go ahead and turn it over to you, and the room is yours.
All right, thank you, Morgan. And what I'm going to do, guys, is sort of take over projection. I've got some slides that I want to show you about the market, but um, I think when you look at markets, you have to look at things that are constantly in development. So I'm actually going to project out PowerPoint program, and we'll do some editing of the slides as we go, just sort of keep things fresh. Now, first thing that you have to do whenever you start to look at a market and try and understand it is figure out what has the market done to this point. And we're in an interesting situation here. We finished out the first quarter. We finished out March of 2013. Back at what we see from that time frame. Now, you always have to have, and TradingPub does a good job of getting this for me, the risk disclaimer. We got to tell everybody that there is risk in trading. For those of you unfamiliar, there is a very high degree of risk involved in trading. And you see all the other little statements down here. What it amounts to is that we are in a business of trying to predict what the market's going to do next. We're not going to be 100% accurate. Anybody who thinks they are, well, maybe you need to look at a different type of profession. This is a profession where we have wins, we have losses, and it's all based on our ability to understand what we're seeing. So I would highly recommend anybody looking to get involved with trading, get involved with money that you're willing to risk, money that you're willing to lose, in fact. So that's the disclaimer, and I know that I say that up front, and no one's really comfortable with it. They're like, "Well, wait a second, we're here to learn about winning." Well, ending, hopefully, but the most difficult thing in the world to do is to trade with money you can't afford to lose. So put that risk disclaimer out there so everybody is aware. Any choices you make in terms of what you want to look at in the market, those are going to be your choices. Now, the highlights, what I want to talk to you about tonight, these are little things that I use in the market. CPR, which represents change as a percent of range. We're going to review the first quarter and March of 2013 from that perspective, how the markets look. A healthy CPR reading in most markets should be less than 50% in terms of absolute value. And then we're going to have the CPR projection number, which is that 50% value in terms of market price. So we're going to look at a couple different markets with that. And then we're going to break down, try and tell the story of what the market is showing us. All right, so let's start with March of 2013. This is kind of a review session here because the move that we're looking for actually happened last week. But I want you to understand how things set up. So if you look at the performance in these major markets, the E-mini S&P, the YM, which is the Dow futures, NQ is the NASDAQ futures, the DAX and the Euro stocks are both traded at the Eurex exchange, which is out of Frankfurt, Germany. Russell 2000, many of you are familiar with that. So a couple of things that should draw your attention here. If you look down towards the bottom of the chart where CPR and CPR projection are, I'm looking at numbers in those big U.S. markets, the S&P, Dow, NASDAQ, and way over on the other side, the Russell, that show that March of 2013 was an overbought month. CPR readings at 78.85% in the E-mini S&P, 78.09% in the Dow futures, and 71.5% in the NASDAQ, and then over in the Russell, 75.96, all greater than 50%. Now, just to be clear, I want to make sure everybody understands what I'm talking about here. If we look at the range of the market, difference between high and low, you have a range in the S&P at 65 points. The change in the market, which is the difference from open to close, is 51.25. So 51.25 is 78.85% of 65 points. Now, that's kind of an important concept for what we're doing, but in terms of figuring out range versus change and all this information, you don't need a program like what you see on my screen, roadmap software, where I've got the custom pages over here. You don't really need that. You can get end of day information, end of month information off of the exchanges. If you go to CME.com, you can look up the information there. If you're looking at an individual stock, you can generally get that off of the New York Stock Exchange or wherever the stock is traded. So this is readily available information. So that's what we're basing our understanding on here. Now the CPR projection represents, given the range of 65 points, where would the market be at the 50% line? And the quickest way to do this, an easy calculation for you to figure out, if the range is 65 points, you want to figure out what half of that is. Now, what's half of 65? This shouldn't be too difficult. Most of you should be able to figure it out pretty quickly. 32 and a half. Okay, so now we go from the open of 1512.50 in the E-mini S&P, and if you add 32 and a half points, because the market went up, if the market had gone down, you'd be subtracting, but we're going to add 32 and a half points to 1512.50, and that gets you to 1545. So 1545 was the number we were looking at as the retracement value based on what the market did in March. Now that's simple story number one. There's a little bit more to a market when you look at it. These were the goals that I was looking for after March in that first week of April. Rally past 1565. Now the reason 1565 is important here, it was sort of a target number that the market gave us during the expiration and rollover time period with futures contracts. 1565 was the high of the March contract before it expired. At that time, the high of the E-mini S&P itself, with the lead contract being June, and this is a little bit confusing when you talk about futures because they have this rollover time period, especially U.S. markets. The European markets really don't have that, but it's something we have to be aware of. So 1565 was kind of a target price. And the way it works, we're trading at a discount right now, or if you were to look at the September contract of the E-mini S&P, it's trading lower than the June contract that we're currently in. The same was true when we rolled from March to June. So when we make the June contract, in this case for this time period, our lead, if it's setting a new high during that time, the March contract was trading higher. So 1565, that's sort of an advanced concept. I want to leave that on the sidelines right now, but kind of give you an idea of why I'm looking at 1565. So my goals after March, the market should rally past 1565. It should retrace to 1545, and I've got to have in the back of my mind there the all-time high of the E-mini S&P. Now, I'm sure we have some futures traders in the room. Most of you guys are probably looking at cash markets, but for those of you who are familiar with futures, how many of you are aware of what the all-time high in the E-mini S&P is? And apparently Carol is aware. There you go. Okay. So I can always count on some of the key number students. All right, 1586.75. So that's step number 3. The first step was 1565. The second step, retracement to 1545. So when we get these goals, we understand what the market's trying to do. We then want to be able to trade in anticipation of that. Now, let's go in here and how can we trade that? Well, because we don't know exactly what the market's going to do, we want to have some sort of trading mechanism that allows us to look out, say maybe on a week-long basis. I like using the weekly binaries in Nadex, especially if I've got a setup that I can take advantage of at the start of the week, and last week I had that. But Nadex provides defined risk on a longer term view. And by that I mean if I'm looking at the weekly contracts, and I'm going to show you these right now. These are the weekly contracts. They're still up. You can see the expiration coming in. And this is for the E-mini S&P 500. They also have, it's listed as the US 500. They have the small cap 2000, which is the Russell. They have the Tech 100. That's the Nasdaq 100. The Wall Street 30 would be based on what you're seeing in the Dow Jones futures. Japan 225, the Germany 30, and the FTSE 100. So basically, the FTSE, the DAX, the Nikkei, the S&P 500, Russell 2000, the Nasdaq 100, and the mini Dow futures. So all that's going to be based in here. And when we're looking at these numbers, what we're seeing is probabilities that the market will close greater than that price. So greater than whatever the price here is. So if I think the market's going down, I'm going to look down here. We're trading at about 1559.50 right now. You can see the levels here. It's about a 50% mark. But if I think that we're going to be down by the end of the week, I can come down here a 1523 half, 35 half, or even 47 half. And if I sell the Nadex here at 71, I'm only risking 30 points. Or in this case, it would be $30 on this particular trade with this particular layout. What I'm trying to achieve is be able to present out possibilities that I don't have to put extended risk on. If I wanted to be short in the E-mini S&P right now and be able to hold that position through the end of the week, if we rally up, we could rally a lot. And that 1586.75 is somewhere out there in the back of my mind. So that's excessive risk looking out for a week. So the Nadex gives me an opportunity to control that risk. And you can see a lot of trades here are going in 500 lots. So a lot of people think of this as, oh, I'm only risking $30. Well, if you're doing a bigger size, obviously, you're risking a lot more. You can see some 50 lots down here. You can trade in 5 lots. You can trade in 1 lot. You can trade any size you want. So Nadex gives us the opportunity to trade this perspective. Now, if the market achieved its first goal, going back to the goals that we were looking for, 1565 retraced to 1545 all-time high. If the market achieved its first goal, it would run at that second one. Yeah, we're still here, Sal. I'm glad you typed that in, Morgan, because he probably can't hear me. But if the market achieved its first goal, it might take a run at the second one. So we use weekly binaries to take advantage of that. Now, Nadex, and I guess you said Chris was going to come on after me, and he'll get into a little bit more detail about this. North American Derivatives Exchange, there's CFTC registered electronic futures exchange, DCM, designated contract market, DCO, derivatives clearing organization. Contracts are designed for the retail trader. This is not really, but trust me, the big guys are out there using this. So we still get to trade with them. We just don't have to put up the type of money that you would for a full futures contract or getting involved in stocks and an optionable position in stocks, which means you have to have 100 shares. So we can get into Nadex at a much lower price point. Low cost of entry, limited risk, fully collateralized contracts. The limited risk is defined risk here. So the most I'm going to risk on any one contract, on any one trade, is $100. And not even that. So it's going to be less than $100. And what you're looking at is the percentage, the probability that something would occur. So it's the only U.S. exchange that accepts direct retail members. In other words, your broker Yeah, he doesn't have to know about this. You don't have to get your broker involved. You don't have to pay out commissions to him. You're going to pay exchange fees. And let's see, that's where we get into the cost. No membership fee, initial deposit of only $100, exchange fee of 90 cents per lot side in and out. That means that's a round turn at 90 cents. Expiration fee of 90 cents per lot on successful trades. Fees capped at $9 per order. So if we're doing 10 contracts, that comes out to $9. Anything over 10 contracts. Is that still true, Chris? Oh, that means there's an advantage to going over 10 contracts. So binary option. Binary option is a simple short-term contract. It can be intraday, daily, and weekly, limited risk, fully collateralized contracts, yes or no proposition, very straightforward, traded long or short, price for retail trader, each contract $1 per tick. So as I look at this platform, and apparently I have my prices popping up in front of it. That's from my other program. But basically, if I make the decision that I believe the market has tipped its hand and is heading higher, I can buy a 1583.50 strike here. If I want to reach out to the market and get it, I can buy it at 1950. If I believe the market has said we're rallying for the rest of the week, now I'm spending $20 to see if the market can get above 1583.50. We're currently trading at around the 1559 level. Now I'm going to show you a little bit more here. In these slides, we know what the market did last week. It dropped down, got down to 1533 quarter, went past the 1545, rallied back up into that 1545 area. Let me show you now what we're looking for the quarter. This is important. So we opened the quarter at 1443, high of 1564.50. We've been higher than that now, but this is the first quarter. The low was 1438 quarter, and the close 1563.75. So the market had 126.5 range, and it was up 120.75 points. CPR reading on that is at 95.45%. In other words, extremely overbought. Now, one thing I should tell you about any market is that overbought markets can remain overbought longer than you can remain insolvent. So be aware of that. But let's look at what are the goals after the first quarter. So we have two numbers that should jump out at you. That 1586.75 all-time high and the possibility of retracing back to, got 1506.13 here, but I'm looking at around 1506 quarter. Now I want you to do simple math. Can you guys tell me what's halfway between those numbers? Midpoint of those two numbers between 1586.75 and 1506 quarter? I'm not going to ask you to do tough math here. Or maybe I am. Okay. There's an 80-point difference, 80.5-point difference, which means you're looking at 40.5 points, but David's got it. 1546.50 is the midpoint of those two numbers. Now that becomes a rallying point for the market. You may remember Friday, we're trading down at about 1534, 1535 with the low at 33 quarter, low 33.75. I can't remember which one it was. It was right in that area. And I think everybody pretty much said, well, that's it, the market's going down. Well, we know that these two numbers exist. So we want to see what the market is trying to accomplish. And essentially what the market did on Friday, it reset the stage. It rallied back up. We closed on Friday. Last traded price was 1547. We opened this week, Sunday night, at 1545.50. So when you come into the market for today's trading, you're looking right at that midpoint, right in the center. The market's balanced. There's an equal shot of it going up to 1586.75 or down to 1506.25. That's changed a little bit. Obviously, the market moves some. And when we take a look at Nadex, and I've only got a few more minutes to look at them before they shut these prices down. They'll shut down when the market shut down. Actually, I think a little bit before that. They might be going offline at 4 o'clock. Chip, I might need confirmation of that. But I think they go offline at about 4 o'clock. And we'll come back online a little bit later on this evening. But look down here, you've got 1511.50. That's about the closest to that 1506. It's pretty much off the board right now. You could sell this if you think the market's coming down. You could actually sell that 1511.50 and only risk $4. Now, the reason you can do that, and you don't have that great of a number at the 1583.50, you're having to risk $20 to be in that. The reason you can do that is because of what the market has done today. It's pretty much tipped its hand. This little rally right here started, low of that bar is 1547.75. Go down here into that 46.50 area market. And our job as traders, try and recognize what the market is attempting to do and then what we can do about it. By the way, if you want to get started with Nadex, that doesn't work. We need to tell people what the numbers are. There's not much editing there. I'm going to print this up and have this available in PDF format and then get it out to you guys so that you can look at it. But our job as traders is to recognize the story that the market's trying to tell us and then take advantage of that. Why are the spreads so big? Well, that was a weekly. So you're looking at it weekly strikes. If you go down to daily, and give me just 1 second. This is just about finished printing up here. Computer's going a little bit slow, but, well, I can always come back to that. But if we go over to the daily numbers here, which, okay, they aren't letting me see them anymore. You can look at them at the beginning of the next day. The weeklies are going off the board, so they're taking it down. But basically, if we can figure out that story that the market's trying to tell, then we gain a significant advantage. And we can use that advantage in a market like the Nadex market that gives us a, I don't want to say small risk. It is small, but compared to the size of the trade you're talking about, if you've got a $100 account and you're risking $20, but it's a defined risk. When you're in a futures contract, you're in a margin position, so your risk is a bit undefined. If the market starts running away from you, it can be a lot bigger move than you think. With stocks, you know, if you're in a short position and that stock just starts rallying, you can get twisted around pretty quick. If I take a short position in Nadex, I know what my risk is. If I want to make the argument that we're going down to that 1511.50 area, I've only got to risk $4. No matter where the market goes, my risk is $4. If we come down anywhere close to that level, that percentage starts dropping. So when that percentage starts falling, the likelihood of getting below 1511.50 is increased, or the likelihood of staying above it, rather, is decreased. Anything below my entry that I take an exit on, I'm going to be profitable on that. And my risk at any time never goes beyond that $4. If I sold it at 96, never goes beyond $4. So that's a significant advantage. Now, one of the reasons that I can get a trade like that is the likelihood of this market right now getting back down to 1511.50 by the end of the week is pretty slim. So the view of the market, because we rallied up from 1546.50, is a bit more of a positive one. We still have numbers to consider, like the open of the month. And we'll just name this, first quarter. And I'll just put this in my presentations folder. Yeah, exactly. The initial cost of the trade is the maximum risk exposure. So Nadex gives you a flexibility to take advantage of some trades that you might not otherwise take advantage of, that longer term positioning of a trade. And I think that's really where I use it. I take advantage of it. It does, in addition to limiting your risk, you're also limiting your return. Well, you do have time decay involved. It's just a lot simpler. It's a probability. Now, with probabilities, when that time decay starts to set in, the odds of the market moving down 6 points in a week are pretty large. The odds of the market moving down 6 points in an hour start to drop off a little bit. The odds of the market moving down 6 points in 5 minutes are, well, that's even tougher. So you do have time decay of a sort. And yeah, as Chip points out, if your binary is in the money, that actually helps you out. But it's a lot less complicated, I think, than what you're looking at with the options. Number one, if I think the market's going higher, I'm going to buy. If I think it's going lower, I'm going to sell. There's none of this call, put. I'm buying a call if I think the market's going up, but I'm selling a put if I think the market's going up, and I'm selling a call if I think the market's going down, and I'm buying a put if I think the market's going down. So, yeah, very simplified version of options. But if you learn how to use Nadex, especially in my mind, that long-term, that weekly type strategy, weekly options are all the rage. Everybody wants to get involved with them. If you can play Nadex with these weekly binaries and be able to identify those levels that the market's seeking out, then you gain a significant advantage when you move over and you start looking at weekly options and stocks, and being able to tell the story, to know what the market's trying to do for you. And I think that's really the advantage. So if we can set up the story, understand the goals, my goal for the quarter is now all-time high at 1586.75, or retrace back to 1506 quarter. Last week, the goals were a little bit simpler. Rally past 1565, which it did Sunday night. Retrace back to 1545, which it did on Tuesday. All-time high, didn't happen. So last week was a lot simpler. And actually, Chris, I need to, or sorry, Chip, keep calling you Chris. Sorry about that. But Chip, when you come on, and I'm going to turn the room over to Morgan, he'll make the transition just a minute. Oh, when is apparently, no. Yeah, you did lose audio a little bit. But if you know what that story is likely to be, where the number is, what the market's trying to get to, and this again was last week. We're seeing a lot of the same action this week. That gives us a lot of potential. And it's a great training ground, a great proving ground. Because if you can start to recognize the numbers and the probability of getting to those strike prices in Nadex and learn there, you can take that information over into futures markets. And the main thing you got to figure out with futures markets is controlling your risk. That's going to be important because it's controlled for you in Nadex. You have to learn to control that. But it opens up the entire trading world. The PDF isn't opening for you. A lot of times it's difficult to open from the documents folder. You do want to make sure that you have a PDF reader available. But Morgan, I think that's about all the coverage from me today. So I'm going to turn the room back over to you. Okay, so I'm turning the room over to Chip. Or is that the answer to the binaries? Or even sim trading? I'm not aware. Well, actually, no. They do have sim trading capacity. You can actually open a simulated account and start looking at that. I'm not sure the demo account. How long does that last? Yeah, when I started in it, I was doing a demo, so that's definitely possible. But if you go to nadex.com, they have all the information. And I guess Chip, as soon as he gets his mic on, is going to be telling us about that. But let me just go to. I heard a sound. Was that you, Chip? Yeah, I got you.
Can you hear me? Testing. Hello? Oh, okay. Morgan, you wanted me to start off now then? Okay, all right. Chuck, thank you very much for talking about the markets and Nadex. Chuck, obviously I work for Nadex, and Chuck brought up some very good points about right off the bat with risk. When you're trading, you do have to look at your risk exposure, and you have to be willing to lose that if you if you're incorrect on your market view, had adverse market conditions. So you certainly don't want to be trading and you're counting on that for your mortgage. But the nice thing about Nadex is when you're making a trade on any of our products, the bull spreads or the binaries, your initial cost is always going to be your maximum risk exposure. So right off the bat, the order ticket's going to display, after you put in the number of contracts you want to buy or sell, it's going to show you what your cost is, and it's going to show you what the net payout's going to be. Now on the binary, since it's for sure the contract has a payout value of $100 at expiration. You know right now that this contract at expiration is going to be worth $100 per contract. It's just, are you correct? If you hold it till expiration, it's just, are you right or are you incorrect? Which is it? Now remember, you can always offset the trade early to either cut your loss or take early profit. With the bull spreads, it's a variable payout. So essentially we have two types of products, the bull spreads and the binaries. They're both limited risk products, and they're very unique because the cost of entry is much lower. These are tiny little contracts compared to the bigger leverage contracts at the Merck and all the other bigger exchanges. But our contracts essentially have a cap and a floor, and that's what keeps it keeps the cost down. Additionally, is these are very short-term options. So if the move doesn't happen by the time that your option expires, plus, but it also keeps the cost of entry cheap. What happens is that especially in the bull spreads, you'll see these instruments, because they are so short-term in duration. It's kind of a cross between cash and an option, future and an option. So anyway, I guess what let's see, what did I want to talk about? The fees that we were touching on is when you make a trade on Nadex, it's 90 cents to place the trade per contract. If you offset, it's 90 cents, so it's a $1.80 round turn. If it's basically all the way 90 cents, if you do a a 4 lot, it would be a $7.20 round turn. But if you do a 10 lot, it's 9 in, 9 out, 18 round turn, but that's where it's capped. So if you do a 50 lot, 100 lot, any of that, it's 18 round turn. There's no additional fees, exchange fees, NFA fee, broker fees. All the trades on Nadex are self-directed. So you're pulling the trigger, you're making the trading decision, and this is what's great with Chuck, is he's giving you, he's helping you analyze the market, come up with your trading ideas. All Nadex is really is a choice. It's another choice. You can trade futures with leverage, unlimited risk, unlimited profit potential. It's volatile. It takes a lot of money to trade it. On Nadex, the cost of entry is much smaller, but you can make money on Nadex as well. It's certainly worth the look to take a look. What's my cost? What's my payout? Does it make sense? If you're getting up to some target level in on your technical analysis and say, okay, I think we're starting to we're topping out. Well, I can trade futures, or maybe I could buy some binaries. Maybe it only costs me $10 to put on one contract, 10 to make net 90. And remember, if I'm selling 90s, I want the market to go down. My cost is $10. And the rule of thumb, if the underline's trading at the strike, then the fair value should be around 50. So sell it at 90, buy it back at 50, or wait till the expiration, or maybe it's got some more legs, and as it sells off farther below the strike, then it's going to get cheaper and cheaper, and you can make that decision. But Nadex offers a very unique way to trade based on these these derivative markets, stock index futures, commodity futures, or spot FX. So we do have a demo account. You can, initially I think it's 2 weeks is what they give you. Somebody from the exchange will call and try to help you and see if you have any questions, but by all means you can have it on longer. So it's certainly there for education, and the demo account's there to make sure you understand the mechanics. Okay, short-term capital gain. Well, we are. Let me refer to this because recently we had some changes here. Recently, first of all, Nadex is subject to the regulatory oversight of CFTC. And we have recently been advised by the staff of the CFTC that our instruments are now considered commodity options, categorized as swaps. So, you know, derivative products are, you know, complicated, and you just have to talk to your tax advisor on this. We can't advise on that. What other kind of questions do you have? To open up a Nadex account, you can, for sure, you can do it with 100. Well, for sure, you should open up a demo account. Try it out, ask questions, see if it's something you like. There's a lot of YouTube videos out there. Morgan's got this education arm of TradingPub. You can certainly learn about how everything works there. And if you decide that it's something you want to try, again, you can open up an account with as little as $100. The only stipulation you have on funding is you cannot withdraw funds for, I believe it's the first 14 days. Now, you can trade with that immediately. However, you cannot withdraw the funds 14 days on whatever bank information you have. After you've sufficed on that 14-day rule, then anytime you want to withdraw funds, as long as your funding information hasn't changed, there's no other restrictions. No. Okay. As right now, Nadex is limited to U.S. residents. We are, just to let you know, that our order was changed where we have intermediation. We recently purchased some hardware where we can offer to FCMs basically a white label trading platform, back office, risk component. And so when the FCMs join our exchange, that's when, if you live outside of the U.S., you'll be able to trade to any FCM that says joined Nadex and trade through the FCM to trade on the Nadex products. Okay. Let's see. In comparison to some of the day trading rules, again, we are CFTC regulated, so as long as you have capital in your account, as we touch base on fully collateralized contracts, as long as you have the capital in your account to cover the initial cost of the trade plus fee, then you can place the trade. If you don't have enough to place the trade, then the trade won't happen. The trading platform will not permit you to do it. So an offset essentially is taking profit or cutting your exposure. So, and as long as you have the capital in your account, you can trade, buy, sell, buy, whatever you want, as long as you have the funds. All trades are fully collateralized. Let's see. Here's one thing that you may want to, inactivity fee. No, you can, well, first of all, you can place, when you're a member of Nadex, essentially you're like a local on the exchange. Okay, so you see that, the order book, it goes 3 deep. And if you want to make the market better, you could actually be actually the bid and offer. You can't trade with yourself, but you can be the best market. So if you place orders, cancel them, all that, there's no cost for that. If you just open up an account and just sit there, don't do anything, there's no fee. So hopefully that answers the question. Okay, you're in Europe, and when we have an FCM join our exchange as a member connected to the exchange, then the FCM will offer our Nadex products. Assuming that you can be a client of that particular FCM, then you'll be able to trade the Nadex products. Currently, the way we're structured with the CFTC is that only U.S. residents can trade direct to the exchange. Okay, I've heard that. And I think it's great. We have some very qualified customer service people out there. They really want to help. A lot of them are ex-futures guys on the floor, traders, FX people. So there's a lot of good experience involved with those people. Color code the trade. Yeah, that's not a bad idea. You know what? I will. Have you made that suggestion before? Color code. All right, I'm using that. Thank you very much. Color code trade history. Any other suggestions? Oh, you have. Okay. Well, I know the statements are a bit to be desired, and I know that that's one of the things that's on the to-do board too, as well. But color code trade history is a good one, and I will make sure to bring it up tomorrow. Okay. Oh, Dan can't get through. Okay, well that's all right. Well, I'll see who else we can talk to. So Dan's my boss. Any other suggestions out there, or any questions I can help anybody else out with? But essentially, I encourage you guys to check out the demo account, learn the mechanics. I mean, there's simplified options. It's very similar to long call, long put, just what's your direction, which direction are, long call, I got a bullish view. Am I going to buy an in the money, at the money, out of the money? I'm bearish, okay, I'm selling it. It's a long put. Both of them are cost. Now, when you're doing these binaries or even the spreads, essentially the in the money, the at the money, the out of the money, as you increase the duration, it's the edge. It's how much edge are you giving or receiving. So compare a weekly compared to 2-hour binaries. Huge difference for if I'm paying 80 to make net 20 on a 2-hour option versus a weekly, the pip difference is if I'm doing a currency trade, it might be 100 pips versus 20 pips. So you need to realize that edge that you're giving or receiving. So that's part of the equation when you're thinking about these strategies, as well as where the market's going. What do you feel comfortable with on a cost to payout basis when you're making these trades? And the beauty of it, this order ticket just shows you right there. Here's my cost, here's the net payout. Does it make sense given my view of the market? Like what Chuck's saying, he's given these, here's the range, here's half of it, here's what I'm looking for. Now you tailor it to Nadex and you do a quick check of all the different strikes, durations, what makes sense, and also, is that move going to happen in time? Will a week be enough? Or if I'm doing a 2-hour, that's not enough time. Do I do a week? But then I have to give up more edge, or can it happen by the end of the day? So all these things you're kind of running through. And some people like the variable payouts, so the bull spreads are another choice. Okay, I'm a bull. All right, I will ask about the color. I'll stir it up. Okay. Where do we find deviation numbers? The deviation numbers. I don't think that's for me. Okay. Okay. Well, see, that's the thing with the educators, that they can go a little bit farther into talking about strategy, and really all I can do is talk about the mechanics of the exchange and how our products relate to the underlying, where if you're looking at standard deviations or whatever it is, that in how you're going to utilize that, that's going to be okay. And Daryl, I'm sure, would love to be on one more time to tell you about it. So any other questions? I'm here until you're done asking questions. So okay, well, listen, thank you so much. Feel free to call me directly if you do have any questions. I'll be more than happy to help you out. 312-884-0174. And essentially, you just learn the mechanics of these instruments, and then it becomes just another choice. And sometimes it's going to make sense. Sometimes it's just cost of payout doesn't make sense. But you can certainly feel comfortable knowing that my initial cost, that's all my exposure is. So I can really hang in that trade and not worry about getting stopped out. What the issue is, it's an option. So does it expire before the move? Well, that's the risk. Yes, we have LLC entities. It takes a little longer for the paperwork, but yes, we do have them. Okay. Is that it? All right. Well, listen, thanks for attending, and I'm sure I'll be on again with good old Morgan. All right. Thank you, guys. Take care.
All right, great. Thank you, Chip. We always appreciate you being here. And all right, great. Chip, we appreciate that guarantee that you'll take care of Lawrence's request to get those colors on there. So we, yeah, guys, you guys can serve as my witness here that Chip will get that pushed through. So Chip, we really appreciate that. We'll put you on the line for that. But again, guys, we appreciate you being here. I posted a link. We've got a free library of all kinds of incredible Nadex education. Basically, you put your information in there, and we'll also anybody that puts their info in there, we'll get you guys a week of the we'll get you access for the rest of the week of DTI's trade room, which is where Chuck is throughout the week. So again, you guys can definitely learn a lot from him. We appreciate him being here. He posted that PDF for you. I'll post that again. You just click on that link that says first quarter in March 2013 PDF. And again, we've been educating now on Nadex coming up on a year. And if you go to our website, which is tradingpub.com, you click free education at the top, you'll see a whole section of our website that is dedicated towards Nadex education. And the main thing that we really like about it is the fact that it's built for individual traders like you and me, basically. It's not built for the big institutions. So, we're excited about that when we first learned about it, and have been trying to spread the good word about Nadex ever since we found out about it. So they're a great partner of TradingPub. We appreciate them being here, appreciate Chip and his time, and again, is always willing to help. And so guys, definitely take a look at this. And if you have any questions at all, like you saw in the room today, as far as customer service and support goes, Nadex has the absolute best. You have to be careful saying things that are guaranteed in trading, but I can guarantee you this, that they have the absolute best support that you will find in the trading space. So again, take us up on that. Click on that link. I'll get you set up with all those free videos. You'll receive an email back shortly after you hit submit to get a copy of it. So, all right, thank you very much, Robbie. We appreciate it. We'll get a copy of this recording posted on the TradingPub website tomorrow morning. And they're currently working on solutions to have international clients outside the U.S. So hopefully, we're hoping in the next couple months that they'll have some of those things pushed through. So, all right, guys, our next event, when we shut the room down, it'll give you access